Hi, I'm JD Manning, Realtor with Integrity Realty Group and My Home Group. I'm answering the top 10 questions I get from people when they're buying a home. Question number one is, how much of a down payment do I need to make in order to buy? Well, there's no straightforward answer for everyone. There's lots of different loan programs and lots of different down payment options. Whether it's conventional, VA, FHA, or USDA, the down payment can range for 0% for veterans taking advantage of their VA benefit, and between 3 to 3.5 and as much as 20% down for conventional programs. So there's a program there for everyone, and you may be able to put down a lot less than you may have thought. Question number two, how high does my credit score need to be in order to qualify for a loan? Well, very similarly to the different down payment requirements, most loan programs have a varied minimum required FICO score. Typically 620 and above is good enough to qualify. However, there are certain programs that have an allowance for credit scores as low as a 580. Of course, the higher your FICO score is, the better your interest rate's going to be, and that's going to add up to thousands of dollars saved over the life of your loan. Question number three, how much does it cost to have an agent represent you as a buyer? In most transactions, the commission to the seller's agent and the buyer's agent are going to be paid by the seller. Therefore, my services are free of charge to you as the buyer. If you really want to pay me something though, we'll get something worked out. Question number four, how long does it take to buy a home? Well, a lot of that may depend on how long it takes you to find the right home and get an offer accepted. But once you do have that offer accepted, you're looking at anywhere from about 15 to 45 days, depending on your lender and which loan program you're working with. So anywhere from 4 to 8 weeks is a reasonable estimate for the timeline for buying a home. Question number five, when do I get my keys and when can I move in? Well, there's a lot of hoops to jump through from when you have an accepted offer up until closing, but once we get there, the final step in the process on closing day will be closing escrow and the escrow officer recording the deed with the county. That is the final and official step of the home transferring from the seller to you. And once that happens, then I can give you your keys. Question number six, once you have an offer accepted on a property, you'll write a check to the title company for your earnest money. These are funds that will be held by them until the end of the transaction and will be credited towards your down payment. It's not extra money that you're paying. This is a good faith deposit that shows the seller that you're going to uphold the terms that you've agreed to, and if you were to default on the contract, this earnest money could be paid out to the seller. Number seven, what are closing costs? Well, when purchasing a home, and especially when you're getting a loan, there are going to be several costs and fees associated with doing so. There's going to be title insurance, escrow and recording fees. There are going to be loan origination fees. There's going to be prepaid interest. If there's an HOA, there are going to be HOA fees and prepaid dues. You'll also need to prepay some homeowner's insurance for the first year that you're there. Typically, these costs are going to run anywhere from 1.5% to 3% of the purchase price. Question number eight, what is PMI or private mortgage insurance? Many different loan programs have minimum down payments that are less than 20%. And when you get one of those programs, you will also pay monthly for private mortgage insurance. This is an insurance policy that protects your lender. If you were to default on the loan and they had to foreclose, and the amount that they sold the property for was less than the loan amount, this insurance policy would make up any difference in those amounts. Number nine, what is title insurance? There are actually two different kinds of title insurance policies. Both are designed to guarantee that the title of the property is free and clear of any claims or judgments or any claims that could be made. The first is an owner's title policy. It is purchased by the seller and guarantees you, the buyer, that there are no claims. The second type is a lender's title policy. That is one that you will purchase as a buyer at closing, and it insures your lender. So if any claims come up or anything comes out of the woodwork, both you and your lender are protected. What happens when the appraisal comes back at a value lower than the purchase price? Well, as a buyer, you'll have three options of what you can do in that situation. The first is you can simply cancel the contract and get your earnest money back. The second option is you can choose to make a larger down payment and then go ahead and close on the transaction. The third option is you can attempt to negotiate with the seller and see if you can come to some sort of compromise. You can ask them to lower the price to the new appraised value. Some sellers won't want to do that. Many times we end up negotiating and coming to some sort of an agreement between the buyer and the seller.